Expo between Business Today and India Today TV. Just after 9, let's get you all the opening action. Here's what's making headlines in the corporate and financial world this morning. Reliance Industries halts Russian crude imports at its SEZ refinery from 20th November, fully shifting to non-Russian crude for all exports from 1st December, completing the transition ahead of schedule to meet new import restrictions. TCS and TPG have teamed up in an 18,000 crore rupee venture to launch Hypervolt AI Data Center, a new platform to build large-scale AI and sovereign data centers in India. The partnership aims to tap surging AI demand and strengthen TCS's AI-led services push. Global brokerage HSBC expects the Sensex to reach 94,000 by end 2026, citing improving earnings and cooling valuations. Despite record FPI outflows this year, foreign selling has eased since October, and analysts say India is looking attractive once again. India's core sector stalled in October, hitting a 14-month low as declines in coal, crude oil, natural gas and electricity offset gains in steel, cement, fertilizers and refinery products, leaving infrastructure output flat year-on-year. US markets flipped sharply, Fed cut hopes fade, big tech reverses hard as S&P Nasdaq slide from intraday highs in a major Wall Street U-turn. The VIX jumped to a 6-month high. All right, let's take a look at the overnight action for you and see where we're placed at this point of time. US markets, as we just mentioned, have taken a bit of a U-turn overnight, and lots of factors at play there. Nvidia rally fading, jobs data fueling volatility, Fed rate cut hopes fading as well. So lots of different factors at play. Shailendra Bhatnagar, our chief analyst and editor markets, also with us this morning. Shail, it's not looking like a great cue overnight from Wall Street.
Very good morning to you, Abha. But first things first, there was a record high on the Indian markets, specifically the Nifty yesterday. So what we've promised over the last 15 days has been delivered. 26,227 was breached. 26,242 is a fresh record high for Indian markets after 14 months of really painful effort. Now, coming back to this Nasdaq thing, the index has corrected about 8% in the last 16-17 sessions on Wall Street. And this is ideally good news for Indian markets, Abha. A bit of puncturing of the AI bubble will lead to a lot of money coming to Indian shores. Although we are starting about 82 points lower, I am hopeful that we'll have a fresh closing high for the week this time, as also we have the monthly expiry next week on Tuesday. That will also end in a hurrah. So look at the digital space, look at how strength is coming into metals, into PSUs, and all remains well on Dalal Street despite tantrums in Asia and Wall Street. Abha.
All right, that's true. And in fact, we have seen a resounding number of FPI flows coming back into India. I know, Shail, you've also been speaking to Nishchal Maheshwari on that. What was the key takeaway from that conversation? How confident is he sounding of sustained FPI flows back into the Indian market, and what's driving it?
Well, Abha, Nishchal is one of the most cautious guys that I've known on Dalal Street over the last 20-25 years. And he himself says that a 500-700 point rally on the Nifty is possible from the current space based on the trade deal happening. And the first headline that you read today was Reliance stopping all Russian crude. So the decks are cleared, the trade deal will happen. There is a selling on Wall Street and the AI bubble is about to sort of leak a bit. All that money and fresh FII money will come into our markets, and the first 100 shares where there's liquidity of more than $10 million per day in terms of trading will be their target audience. Abha.
All right, great. And in fact, we've seen a series of brokerage upgrades from Goldman to Morgan, HSBC, all of them now looking at the Indian market with fresh vigor. Joining us this morning, Mayuresh Joshi, Head Equity Research at William O'Neill. Mayuresh, happy to see you this Friday. What are your views on the market as we continue to see new highs and also further upgrades from global brokerages?
Morning, Abba. Morning, Shail. No, I think two things. One, I think the earnings season in Q2, which has largely been very, very positive and supportive, is giving the impetus for the market that second half earnings will be even better. And looking forward in FY27, the base case estimates that were getting drawn out for a single-digit growth is now slowly turning into a double-digit growth. The base case scenario being 12 to 13% earnings growth in FY27. Now, if you map that in terms of earnings growing at 13% on an FY27 exit, the markets will not look very expensive. Obviously, I think on mean averages and standard deviations, a tad bit above the mean or the average levels. But that is expected in terms of the premium tag that India might probably get in terms of earnings remaining resilient, liquidity remaining strong, corporate debt to GDP remaining at lower levels. The impetus that the government is probably doing in terms of private plus public capex expected to continue. So there are enough triggers that might give that premium tag, and valuations might then probably look a little bit easier as we exit FY27.
All right. Now, India and Israel have taken a major step towards strengthening economic ties, signing the terms of reference to kickstart a free trade agreement. The move opens up new possibilities for deeper economic engagement with Indian businesses, gaining fresh investment opportunities in Israel. Commerce Minister Piyush Goyal called the decision to begin FTA talks historic. Listen in.
भारत और इजरायल के बीच आज फ्री ट्रेड एग्रीमेंट पे चर्चा शुरू करने के लिए पहला कदम उठाया गया है। हमने टर्म्स ऑफ रेफरेंस आज तय करके उस पर हस्ताक्षर किए। मेरे मित्र इजरायल के मिनिस्टर शिंडीर बरकत जी और मेरे बीच जो आपसी संबंध बना है, जिस प्रकार से माननीय प्रधानमंत्री नरेंद्र मोदी जी और प्रधानमंत्री नेतन्याहू जी के बीच संबंध है, और जिस प्रकार से दोनों देशों के बीच सहभागिता की संभावनाएं हैं, कॉम्प्लीमेंट्री पॉसिबिलिटीज हैं, जिस प्रकार से दोनों देशों के चुनौतियां भी एक जैसी हैं, उसको मद्देनजर रखते हुए हम समझते हैं कि ये एक अच्छी शुरुआत हो सकती है, अच्छा एक द्विपक्षीय व्यापार का करार बनेगा और नए अवसर बड़े पैमाने पे खोलेगा।
Well, talking about trade agreements, of course, we've been watching out for the India-US negotiations to come to a close. And to a large extent, I think markets have been factoring that in this week. Expected to be closed formally this weekend, but that's still only source-based. We don't have any, of course, clear, confirmed news of that. But what do we expect to see in terms of a reaction, Shail, once we get the final stamp?
Abha, it's my gut feel that over the weekend you will have the announcement of the Indo-US trade deal and the reduction in sanctions that have been imposed upon Indian imports. That is 25% plus 25%. So the extra 25% will go, and most probably you will narrow it down between 18 to 20%, between 15 to 20% on Indian imports. So that is something that I'm hoping will happen over the weekend. You will have a gap up on the Nifty on Monday, and then probably selling pressure seeping in, profit booking seeping in. From Friday, which is November 7th, the Nifty has rallied 900 points or 3.55% in 9 sessions. So that has to be digested by the market. And this rally is ahead of this probable event which might happen on this weekend. Abha.
All right. Well, Shail, trusting his gut there. We'll get back to him on that on Monday and see what happens post all the trade news coming in. Of course, markets will be eyeing that. It's going to be very important in terms of a trigger, and really for us to move past that with many stocks and sectors hanging in the balance in terms of how they're going to manage and plan out their earnings as well as their business outlook in light of all the uncertainty around Trump and his trade negotiations. All right, all set for the opening bell right now. Lots and lots of stocks and news, and we'll discuss that this morning. But let's first pull up the opening ticks for you. Nifty just a marginal downtick right now, as Shail also mentioned, right now just absorbing some of the recent gains. 26113, that's where we've opened up this Friday. Nifty Bank is down about 0.5% at this point of time. Let's pull up some of the other sectoral movers. IT also down about 0.5%. So a whole host of stocks in the red. I feel if we pull up the advanced decline ratio, we'll probably see a bit of a sort of bias towards the declines this morning, it looks like. On the upside, though, marginal gains on an IndusInd Bank, M&M, HUL. That's where we're seeing some amount of green or traction in early morning trade. But let's pull up some of those losers for you, and the pressure will clearly be on some of the metal names, IT, finance, banks. That's really where you're seeing a little bit of a chip off this morning. Titan also cooling off, has seen successive gains, new highs, some of the defense majors. So not just IT and banks, but also some of these very popular movers over the last week or 2 weeks. Reliance also cooling off so far this morning. So that's what we're seeing on the index. In terms of stocks and news as well, we'll pull up a few for you as we go along. But first, Shail, what else are you picking up on your screen?
Abha, a bit of a downtick. 26,100 is being tested by the bulls and the bears. So this should hold, and one should be happy if you have a bit of a downtick in the first 15-20 minutes of trade. 200 points down on the Bank Nifty. The advanced decline is favoring bears. Just 733 shares in the green versus 1521 in the red. All 19 indices are in the red. Nothing to be worried about. This is normal profit booking after a 3 percentage point rise on the Nifty. If you look at fresh highs in the market, where we should be concentrating all our energies into, well, within the NSE 500, so far nothing, but you have Radico doing very well, 1.7% higher, 3420. Bank of India in top shape. You have Federal Bank doing extremely well, 245.6. And of course, in terms of volume buzzers, you have Adani Wilmar, 0.5% lower. Very heavy volumes. This looks like a block deal, 4.84 crore shares traded. And of course, a strong move coming into railway company RITES. Abha.
All right, Radico has been moving lately. We've been seeing that successive move this week. A few brokerage views. Let's pull up M&M, a buy call coming in from Citi on that one. Strong growth outlook on an M&M. Let's just see how it's doing today, but it's also been, I think, pretty decent over the last week or so, up about 0.6%. Morgan Stanley on TCS, overweight, 3,430 is the target. TCS also big news in terms of tie-ups and plans with regards to AI contracts, a $1 billion strategic equity investment by private equity player, validating, of course, further business potential as well. That's what we were looking at this morning, up about 0.2% today. It's been in the news pretty much all week. Nuvama on Vedanta, buy call coming in at 686 rupees per share. Focus there on the demerger, deleveraging, and also supported by commodity tailwinds. So that's some of the top picks this morning. Mayuresh, let me come to you. I know we ask you your topics every single day, but this morning, where are your areas of focus?
So clearly, I think the domestic apparel makers, I think, have posted decent set of numbers. So whether you talk about V2 Retail or Vishal Megamart, I think they're appropriately placed, both in terms of their average realizations that they've got for their apparel business, but they've also got the FMCG and the grocery business as well. Now, the areas that they operate out of, UP, Bihar, Jharkhand, you've already seen significant improvements happening in terms of discretionary spending, expected more out of that. So I think keeping a watch on these two stocks. The second element is a few of the power ancillary companies, because our take is clearly that government capex will continue at a very, very fast pace as far as this space is concerned. And therefore, a stock like a Neyveli Lignite is on our watch list. A stock like Power India is on our watch list. Our take is that with private capex also expected to come through, and a mix of thermal and more renewable additions coming through, this entire power ecosystem over a longer period of time actually can do.
Absolutely. I think that's a really, interesting strategy from Mayuresh, given also the kind of traction we've seen across some of these stocks lately. Definitely one to keep an eye on. Let's pull up Grow for you. This one is keeping the markets on its toes. We saw consecutive days of gains post-listing, and then, of course, a complete crash for a couple of days. Today, it's back in action, up about 4% again, 163. So maybe too soon to write off the new listing, Shail. Of course, after 2 days of losses, the market was getting really worried, saying capital erosion and so on. But today it's back in action.
Well, Abha, I generally don't want to stick my neck out on IPOs. And this one's really rallied from 100 rupees all the way to 182, then a bit of a downtick. I would just stay out and, not really stick my neck out on Grow. These are just too volatile times. People, take in positions because of what we all say. And it's best not to sort of, touch a bee's hive, so to say. We'll wait and see what the first 1 month's performance is and the quarterlies are for Grow, and then maybe take a call. But look at India VIX. This has surged 11%, given the volatility in the market and the fear that's creeping in, profit booking happening. And in one single shot, broken past 200-day moving average and 365-day moving average. Meanwhile, the Nifty is recovering from an intraday low. 26,100 was tested, 136 is what you see. And very strong moves coming into auto giants like Eicher Motors, M&M, a strong move coming into Coforge, as also Hero Motors. And of course, who can forget the capital market space? Look at BSE, look at IEX, and of course, look at Grow.
So coming back full circle to that, so Mayuresh, I'm going to bring you in here because clearly, if the capital market story is intact, new listing or not, it's also going to be part of that larger trend, isn't it?
Absolutely, Abba. But somewhere I think even the valuations will come into picture. And at one point of time, it had crossed the market cap of BSC a couple of days back. So I think that is where I think the irrationality probably crept in. However, I think as Shail pointed out, I think today numbers are expected for growth in the latter half. And after a 1 month locking in December second week, you'll probably see a large number of shares come in. So I think we'll need to watch out for these events. And clearly at this point of time, I think it's overdone. It's IPO pricing as we speak. We remain constructive on capital markets as a theme, and therefore I think exchanges, if you can have a look at MCX as an example, I think there is a lot of optionality that can still come through in terms of more futures, option contract introduced, participation expected to improve quite significantly. And the volatility that one really expects, not just in gold, silver, but also in natural gas and other commodities as well, will keep the average daily traded volumes at elevated levels. So I think we're more than happy on the exchange platforms at this juncture.
All right. So essentially, there are still possibly better alternatives if you're looking at that particular trend or story, rather than, and something like a Grow, which is only a recent listing, perhaps give it some time to play out. That's really the consensus I'm hearing from both Shail and Mayuresh. 9:23 right now. We've got Hindalco taking quite a bit of a knock today. I know you're talking about commodities, Mayuresh. Just wanted to get a sense, because clearly this is some amount of profit booking as well. But within the metals basket, where would you perhaps say are the top 2 or 3 names one should focus one's attention on?
So if you probably look at the commodity manufacturers, I think they're really lignite remains on our watch list, as you said. I think one of the more dominant lignite manufacturers in the country, they are expanding their renewable capacity quite significantly over the next few years. Thermal capacity also expected to go up. The lignite production capacity will actually double over the next 3 to 4 years, which basically means that the kind of numbers that one expects consistently should come through. They're doing EBITDA margins of 38%, but with the product mix that they'll probably have, they're already looking at 45% as an exit rate on an FY27 basis. So over the next couple of years, if there is a 600 basis improvement in overall operating margins with better top line, the earnings can grow exponentially. So I think heavily lignite out of the manufacturers is something that we're keeping a watch on. Out of the other ancillary plays, I think you've got Prakash Industries as an example, Sandur Manganese as an example. Though I think largely commodity driven in terms of ferroalloys, silico-manganese alloys. They've got a coke plant which is coming up specifically in the case of Sandur, and the steel operations as well. I think they've got a proper mix in terms of commodities as a play that can probably play out substantially, in our opinion, over the next few quarters as well. So I think a few of these plays within the commodity basket, in our opinion, can perform.
All right. In fact, Hindalco is down after also another fire at the Novelis Oswego aluminum plant. So there's also a fire breaking out at one of their plants, which potentially could also be leading to that reaction on that stock. Let's also pull up Reliance for you, because Reliance is seeing definitely a reaction to the news of Russian imports stopping. So again, nearing the end of that trade deal, Reliance is actually trading at new highs at this point of time and has been looking fairly steady on the charts. Mayuresh, when it comes to oil and gas, Reliance, the other refiners on the back of, for instance, the news around the trade deal and the conclusion there, clearly some reaction here on the news of Russian imports stopping. It's at a 52-week high right now.
Yes, I think that is one element of the news of, and the other element is Singapore GRMs have actually touched $9.5. So what really this means for Reliance with all the various feedstock options it's got, if it always trades at a $4 to $5 premium to Singapore GRM. So if Singapore GRMs sustain, say within the range of $7 to $10, I think Reliance refining margins can improve substantially as we exit Q3. Retail business is expected to make a very strong comeback, both Reliance Retail as well as Jio, the telecom part of the businesses as well. And again, I think the new energy businesses, as they come on stream and as the utilization level improves, the ROEs out there are going to definitely improve as we exit FY27. So I think a lot of triggers to look at. Even if Singapore GRMs remain a little bit volatile, the whole perspective and the whole rationale out here is that because of various feedstock options, A, optionality increases, and B, I think the component in terms of overall EBIT contribution is now lower. So I think that shields and hedges the overall risk that comes out of there as well. So I think that's where the markets are probably looking at when it comes to Reliance.
All right. Thanks for joining us this morning, Mayuresh. Have a good weekend ahead. Let's also bring you an excerpt of a conversation that Shail had with Nishchal Maheshwari on what the next 6 months could mean for Indian equities, with macro tailwinds strengthening, earnings surprising on the upside, and the crucial India-US deal still pending. What could be the next fillip for the markets? Listen in.
Now, with this, very strong macro tailwind and the fact that the record high is now out of our way, what do you think the next 6 months hold for the market? Do you see foreign institutional investors turning net positive? Because you also mentioned that all other emerging markets are up 20%. We are flat compared with them in 2025. What could be another positive trigger for the market ahead?
So I think one positive trigger after this current quarter results have been basically, I think it was in better than expected results. So a low double-digit number, I think was most of the people were not expecting. I think it has come pretty well, and most of the analysts have been forced to upgrade their numbers. So I see more upgrades than downgrades in the current quarter. So I think that has been a positive scenario, and that's why you're seeing the market also reacting positively to it. Having said that, I think once the market gets out of crosses this to 26,230, I think there would be fresh triggers basically for India buying. But I think the big trigger would be basically the India-US deal. As and when it gets signed, I think you will see a whole slew of money coming into the country.
All right, that's all we have on this edition of the show, but do tune in back at 3 p.m. for all the market closing action. Thanks for watching.